What's up, guys? Welcome back to another day trading. Another day trading video. But we're not live day trading. Today is going to be the weekly report on my week's just weekly and how I essentially did this week. So I'm up 470. I think 470. I could have been up a clean 1K or 950, but I did lose a nice 480. Well, not a nice 480, but I did lose a 480. What was it? Monday, Tuesday? I think it was Wednesday, Thursday. I did lose 40 Thursday, leaving me with 470 on the week, but also a 83% win rate for the week. Only taking 3 trades. Well, actually 6, but really it's 3 trades. So I have break evens, hit take profit, but yeah, no wait. No, actually 4 trades, because there was a break-even trade on Monday, Wednesday, I'm pretty sure. But yeah, as you can see, that was my report for this week. 83% win rate for the week. I like that. So let's just quickly review our trades for the week, starting with Tuesday. Because on Monday I didn't take any trades. Monday was a no news Monday, so I didn't take any trades. I was looking over the chart, see if I could, but I didn't see anything, I think, so I didn't take anything. But let's quickly go over Tuesdays real quick. Alright, so this was Tuesday's trade. So let's quickly go over it. You can see everything I did good and did bad. So let's quickly go over the trade. So as you can see, there was an inverse with a break of structure on the exact same candle. There's another fair value gap, but we inversed that too. We kept going down, so I put equilibrium from this high to this low. It did take a while. We went up, tapped the equilibrium, so I was patient, waited, and finally did enter outside of equilibrium. Enter the trade. Break even was kind of tight, but I wanted to put my break even at a smart place, so I put break even at the low of this fair value gap. You can see here, which I think was a good place to put it. Break even quickly got tapped. Now the thing is, this trade was so fast. Now break even was actually like around, I think 103, 106, 107, I think, because it just went down so fast. So I think that was good, and it just kept going down, slammed down, and I manually exited out at like 277 or 276, I believe it was, exiting it out manually, and it would have hit full GP, but still that was a win. So let's quickly go over it. So what I did good was this. There was, if we go into the 15 minute, there was a 15-minute fair value gap that it was going into and then getting out of. So there was no liquidity. I like it when we hit liquidity and then we start going down. Do a inverse with a equilibrium. Because liquidity that generates volatility for the market to go in the direction I want it to go. There was no liquidity. I mean, it did hit here. I mean, not really. Here, we like no, like it would like bet like I would have been happy if it hit here. So like that's like that's some like liquidity, but there was a 15-minute right here, and there was a 15-minute, so that was good. So I would just consider that good. Not as good as liquidity. I'd rather have liquidity than 15-minute, but still, the trade looked good. There was a break of structure. There was an inverse fair value gap. I like that, and there was a decent. And my break even wasn't the best, but it was decent because I did like it on how it was below. It was at this fair value gap. So if it could just like, even if it didn't inverse this fair value gap, if it can just tap it, then I would put break even, and I would have been hit with break even, and I would have been fine with the trade. So that's good. Um, I was very patient, so you can see equilibrium went down about what 100 points. It went down 100 points, and now that was annoying. But I was patient. I was waiting for it to exit out equilibrium. I didn't, wasn't impatient. I was being very, very patient for about 40 minutes straight. 40 minutes straight, and I paid and I got rewarded for that. Hit full TP right there, and like 5 6 minutes. I did manually exit. See, if I didn't manually exit, this is why I don't like manually exiting, but I get scared sometimes, I'll admit it. If I didn't manually exit, I would have had full TP. I did sell out like for 30, 40, 50, maybe $50, I think. But still, we had an SMT, and if I put point of control from 9:30 to when I took the trade, you can see that it broke point of control to the direction I wanted to. So boom, now point of control was acting as a resistance. So it went down, 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 and that was good. And that was, I like that. That was good. So yeah. So overall, Tuesday's trade was a 9 out of 10. Let's go over to Monday, Tuesday, Wednesday's trade, chat. All right, now for Monday, Tuesday, Wednesday's trade. All right, for Wednesday's trade, it was a break-even trade. Now, let's go over what happened. So we had an inverse right there, and plus with a break structure at the same time as well. Um, we had a retest, like exactly tapped equilibrium, like right there. Then when outside of equilibrium, I was very smart right there. I was hesitant. Let me see. I'm waiting for a good closure out of the equilibrium. It did went all the way up, giving away like I gave away a lot of points right there. Yes, I'm pretty sure on micro it was like 17 points, but still with this trade, I give it. You can see I give it a 9 out of 10 because this trade was a regardless of break even. A good break even would have been to put it right here, but still would have been break even. Probably no. Yeah, maybe you could have put break even here, but I don't think like why would I put break even here? If I would have put break even on this fair value gap, it would be the low of this fair value gap, and you can see break even hit and still would have got break even. So break even right here, it was good to decent. Um, and yeah, we had this fair value gap, which when outside it when this candle went outside of the equilibrium, it did inverse this fair value gap. So there was another inverse fair value gap. You can see, and there was an SMT. There was an SMT. This time we had a liquidity sweep right there, liquidity, and we hit it. Um, we had inverse fair value gap, break structure, equilibrium, respected a fair value gap too. There was a fair value gap right here. Tapped it while tapping equilibrium with a fair value gap respect. So that's even better. That's even good. That's like adding on to the fact. There was no manual exits this time. I entered. I was very hesitant, which is a good thing to enter because I wanted for it to have a candle closure um, in a 10 point range. As you can see, it did escape it, so this is why I gave away a few points. Good to decent break even. As you can see, it hit break even and then quickly got hit with break even. So, but regardless, even if it went up, even if I like broke my rules, I would have put break even right here, and it was still what I got hit break even. Now it did go up, but this was just unfortunate. This is just one of the times when you can't really do anything. And if we see the point of control from 9:30 to when I entered the trade, it did break above my point of control going into the direction I wanted to. So that's even good. That's good right there. So this trade was a 9 out of 10. I'm pretty sure yesterday's trade was a 9 out of 10 too. Even though this was a break-even trade, I listened to all my rules. I didn't break any rules this time. This is a liquidity sweep this time too, and I thought this trade was good. And I was right. It did go up. It went up to the direction I wanted to, that direction I thought it was going to, and that's exactly what happened. So this trade was a 9 out of 10. I didn't break any of my rules, and I loved it. So let's go on to tomorrow's trade, where unfortunately we had a loss. Now, as you can see, this trade was a 9 out of 10 too, even though I lost, and I'll explain it real quick briefly. As you can see, I wanted longs. I thought the direction was it was going to go up, and I was actually right, but let's quickly break it down. So liquidity right here, this was like a really good liquidity sweep right there. It hit, and I was looking over here because you can see we had a break structure plus an inverse and it kept going up. So my equilibrium was from here to this high, right? But then I saw that it hit liquidity, so I reset it to from I saw that it hit liquidity, so if I was going to take longs, I really really wanted to have a break structure and an inverse. As you can see, inverse break structure, so I was like, okay, this is good. I'm liking this. Now, if I had taken it from here, I would have, probably entered on this candle right there. As you can see, full TP with no drawdown, no going in the red. But it makes no sense. Why would I enter right there when I had a liquidity sweep right there, inverse, break a structure? So I thought, it was better right here. As you can see, it went up, boom. And there was a CSID. So this is quickly when the leg down before hitting a liquidity sweep, and you don't use the wick, you use the candle closure, not the wick. So you can see the wick it did break it. So from the high of this wick, you can see it did close above it. So I thought it was a good trade, you know, honestly. Honestly, it was a good trade. We had liquidity, break a structure, two inverses actually. This inverse two on the same candle, break a structure and inverse, and on this candle there was an inverse, but still it went up, which is good. Um, Equilibrium, you know, we was very patient right there. Hit equilibrium, went out, closed. Candle closure. It closed 6 7 points from the 10 point range I wanted to. So once it closed, I quickly got in. There was a C. I noticed there was a CISD. Yeah, put CSID actually. It's CISD, I think. In the direction. It went into the direction I wanted to for equal point of control. As you can see when I entered. You see point of control is right here, broke above it, so I was very confident. So even if price went down to point of control, I expected it to bounce right here and we go up. You know, I was trusting I trusted in the trade, and once it hit right here, once it went above, I was like, okay, oh, I know for a fact it's gonna go up and hit, you know, full TP. But I listened to my rules, so that's actually another thing. I didn't want a revenge trade. Didn't want to revenge trade, and I actually there was another thing, but I just controlled my child. I didn't want to revenge trade, and yeah, that was another thing. One trade a day, and it was one trade a day. This was a plus, not A plus. There was no S&T, but this was a like a B plus or A trade setup. Like it was really good. It was following everything. Liquidity sweep, two inverses, a breaker structure, equilibrium. It just unfortunately caught people. You know, some people. I think this time people were just getting targeted. You know, people having their stop loss here, and then boom, quickly getting stopped. So a better stop loss would have been to put it in this low. And now I was originally thinking of that, but I was like, darn, that's 100 points, and I sort of have to be targeting 100 points, and I don't target 100 points. So I was like, nah, let me just, if I get stopped out, I get stopped out. I believe in the trade. It's showing all of my rules. There was literally no minuses to this trade. There was literally no reason to not enter in this trade when it followed all of my rules. So I entered in the trade. And unfortunately, it just caught people, you know? It just unfortunately did that. And it's a shame, but you know, it's fine. This is following my strategy. Maybe I can do some tweaks up where I put my stop loss in the low, but I don't do that. Maybe in the future I will, but then that means I have to target a lot more. I like what I target, 65.50 to 60 points. So this, even though this was a losing trade, I followed all my rules. So I'm gonna say this was a 9 out of 10 trade. So let's go into the last trade, which this is Thursday. So let's go over to Friday's trade, the last trade, which was a really really good trade. All right, so now we have Friday's trade. So let's go over it. Now there was no liquidity. We're literally shorting at all-time highs. You know, I've said this before, and I'll say it again. Just because we're at highs doesn't necessarily mean we're gonna go down. But the thing about my strategy is that it shows that, hey, if it breaks structure and enter equilibrium, then there's a strong chance it goes down. Plus, we had a um, what was it called? Oh, the point of control was going to my direction, so it looked like a good trade, and I took it. I was following my rules, and it paid off. All right, so let's quickly break over it. So we had a breaker structure right here. The breaker structure was right here, but I waited for it to break this structure right here, and you can see it broke all these structures, this structure, this structure, this structure, on this one candle. So breaker structure, but still I had it on this low. So yeah. But anyways, breaker structure. Plus we had an inverse. You can see there's a fair value gap right here, and boom, inversed it. I waited for a break structure. No, I didn't really wait for a break structure. My equilibrium was originally right here from here, but I saw that it broke the structure, so I changed my equilibrium from here to this. Yeah, from this high to this low right there, and I was patient. Entered equilibrium. That's when I was locked in. I noticed that there was an SMT, so I was even more confident into the trade. It kept going down, 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 down. As you can see from, if you put point of control from 9:30 from when I took the trade, I noticed that it broke point of control to the direction I wanted it to, so it went down. So even if it went up, boom, it would go down. You being used as a rejection. Yeah, being used as a rejection, but it just kept going down because it broke my point of control. So volume was getting distributed, magnetized to like lower levels right there, because there was a lot of, you know, volume going down in that area. So, you know, that was just my strategy. And let's go over it. Like, no liquidity, yes, but there was a breaking structure, an inverse, patient on equilibrium, a good break even. You can see my break even was at the high of this fair value gap. It could have been good to put it at the low, the middle of this fair value gap, or at the low. But if I had put it at the low, that's like way too far of a fair value gap. So I decided to just, you know, have it have break even at a good place and have break even right here. Now this break even was perfect because it was 27 points. If it's more than 22, I think points, and that's a good, no, 20 points, 20 to 25 points is a good break even. And this was 27, so this was like a really good break even. You can see there was actually an inverse right here going to my direction, and I was hesitant, not really hesitant, but I was careful because there was this 5 minute fair value gap. Right? I could have put break even at the middle of this fair value gap, was my original thought, but I decided no, there's a fair value gap right here. Let's just see if it taps that fair value gap low. And if it taps it and goes up, then I would have already hit break even and took some profits and would have got hit break even, but still took some profits home. But luckily for me, I was very patient with the trade. I waited for it to exit out equilibrium, gave away exactly, I think, 10 points. Actually, I think it was 9 points. Gave away only 9 points into the trade because it was going down. So you can see I would have gave away 14 points if I waited for the closure, but you know, more than 10 points. So I was like, you know what, let me enter in early because it's giving strong direction to the downside. And the trade was just good. You can see I was waiting for this breaker structure, but it never did happen. But still, you can see this is 6 minutes. And remember, this is a trade when I was taking on the toilet. So that was like even more fun. Imagine winning on the toilet. There was a 5 minute breaker structure on this candle as well. I forgot to mention. So that was like this trade was strong direction to strong reaction to the direction I wanted it to. That's why I took the shorts. It was really strong. 5 minute break structure with a 5 minute inversion, inverse fair value gap, SMT, and this time there was no manual exits. Once it hit SMT, I mean break even. Sorry, I put break even, left it to let it tap my full TP, and it's at full TP. So this trade was a 9.5. This whole week I would give it a 9 to 9.5 because I followed every single my rules. I know there was a losing day, but that's a part of the game. There's just losing days, and so yeah, that was all the trades I took. I think it was a good week. I can't wait for next week. I'm gonna do the exact same thing for the week after, and the week after, and the week after, and then the month, and then the month, and then the year, and the year, and the year. For every trade, I want to listen to all my rules. But yeah, that's everything. You know, just moral of the story: just follow your trades, guys. Follow your trades. One more thing: I know we're at all-time highs, but like I said, it was showing strong direction into where I wanted to go. And last time I did want to follow my strategy. Not follow my strategy, but last time I did want to target longs. Since we're at all-time highs, we might as well go for longs, because just because it's going up doesn't necessarily mean it's going down. But that's not following my strategy. If I go for long while it's at all-time highs, that's not following my strategy. It would have to hit a low first and then see liquidity, and then with an inverse and or a breaking structure with an equilibrium, then I would have taken the longs to all-time highs. But since we were just going up since we were just going up and up and up, I would wait for an inverse, equilibrium, and then out. That's follow my strategy. The other one, the first one, where I just wait for equilibrium and that's it, with no breaker structure, with no breaker structure, that's not following my strategy. Where's the inverse? Where's the breaker structure? Like, no. I want to follow my strategy, and this time I did. And shorting all-time highs is dangerous, but it paid off because I was following my strategy. Because I followed my strategy. So remember that. Most stories is follow your strategy. But that's it for today's guys. I'll see you guys on Monday. No, probably not, because no news Monday. But I'll see you guys on Tuesday and next week. Peace.